Hey guys, so following the results of last week's poll, we reviewed the market moves so far for 2024. Now, as we know, 2024 has been a very exciting year with unexpected market developments all around. So in this episode, we look at all the biggest markets, what's happened and where they may go. And this was a really fun and interesting episode, so I'm sure you'll enjoy it. As always, if you have any questions or comments, please send them through to us at podcast@fxscouts.com.
Hey, Alison.
Hey, Chris. How's it going?
Yeah, pretty good, thanks. Pretty good. How are you?
Yeah, good. We had a lovely weekend. We went to a place called Assegai, which is probably about half an hour from here, but at the bottom of the most beautiful landscape. And this it's sort of at the bottom of a big mountain or a drop, and it overlooks a river. It's just, beautiful.
Nice.
Sort
like
of
a safari
glamping.
park kind of thing? Glamping.
Yeah, glamping, yeah. It's got like a cover with mattresses on bunk beds. Yeah, it is actually. I mean, it doesn't have the big five, but it's got giraffe and, zebra and all the stuff.
So you're not going to be attacked by a leopard in the middle of the night in your glamping tent?
No, but you can hear the baboons, which is quite scary.
That is a bit spooky, yeah. Don't like baboons. Not
And
a big
also
fan.
it echoes. So it really feels like they're in the camp with you. Yeah.
Did the kids like it?
Yeah, they love it. Yeah, you do a hike, about a 7K hike down, and it's just amazing. Yeah.
Nice.
How was your weekend?
Yeah, good, thanks. Portugal beat Turkey 3-0 in the Euros.
Oh, brilliant.
So the streets were full of drunken, shouting Portuguese. They were very happy. No, it was great. It was a good weekend. It was a lot of fun. Thank you. But what are we talking about this week?
Well, as you know, last week we had a poll on Facebook and Instagram, and people wanted us to talk about the state of the market. So that was the result. So we thought we'd go through the Forex market, crypto, gold, and then have a look at the Rand with the recent South African elections, and also because we have quite a few South African listeners. And then we'll also look at the state of prop trading and what the future may hold there. I know you just did a lone podcast on prop trading, but I think it's probably quite a good topic to cover again, just because it is so topical,
Yeah, we can run through it again for people who missed that one. And this is our last podcast of the season.
Yes.
Yeah. So we're going to be away for a few weeks now. We're back in mid-August, I think.
Yeah.
And we're back on the 15th of August. I'm taking a summer break, and you're taking a winter break.
Yes. I am taking a winter break, yeah.
Good stuff. Super. So first off, let's have a quick look at the Forex market since the beginning of the year. I mean, it's all been about interest rates, inflation, and then, what the central banks are doing. And things have started getting interesting the last few weeks. But we started the year with a lot of optimism. Inflation started dropping at the tail end of 2023, and markets were sure that interest rates were going to start falling imminently. The Federal Reserve was making all the right noises. Jay Powell, and he stood up there in December and he sounded very optimistic about the future. And so there's a lot of optimism, and the stock markets were up. Futures traders were predicting 4 or 5 cuts to interest rates, the Federal Reserve interest rate in 2024.
Yeah, but as we saw, things turned very quickly. And there was a crazy January NFP where markets were expecting 182,000 new jobs, but instead got 272,000. And the Fed started getting much more wary, about what the future may hold. And what they'd expected. And data showed that inflation remained pretty sticky, and that the 4 or 5 cuts that had, that they'd expected had been paid back to one rate cut now in November, or possibly one in September. They keep on changing their mind on that. And, of course, the economic indicators are still mixed. We've seen some recent data that might point to a slowing US economy, which inevitably gets the markets excited because they really want the September
rate cut.
Yeah.
They really want it.
They really want it. But then, jobs and wages data shows a resilient economy. So it's very mixed, which
It is, yeah.
which is what you can see in the markets as well. You can see that on the charts.
Yep. In the EU and the UK have also really struggled this year. The Bank of England and the European Central Bank both adopted this very data-centric approach that we've seen from the Fed as well. So there's been a very conservative approach from central banks, and that fed directly into the markets. And we saw at the beginning of the year, especially, very little volatility in the Forex markets. And as a result, very low volumes, very low trading volumes. It's some of the lowest we've seen in years. And this is the start of the year. But I mean, things have changed a little bit as the year has gone on.
Yeah, it has. And I remember even talking to Tom Salmon about that, from SpreadX, and he was saying that a lot of traders had actually diversified their portfolios just because there was so little volatility in the Forex market.
Yeah, everybody was getting into stocks and commodities and stuff. Yeah, exactly. Instead.
But then, there has been some recent volatility, as we've seen, especially around inflation data. And we all saw the big drop on the Euro USD in April, so mid-April. And this was from the US CPI coming in over expectations. So I think people were quite surprised by that. And we started to see potential economic weakness from US data over the next month, which then led to a long Euro bull run. So it was very much a yo-yo effect going on in the charts that over most of April.
Yep. But then it's only really gotten interesting in the last few weeks. We started off a few weeks ago, we had the divergence in interest rates, which people have been talking about for a long time, where the European nations, including the European Central Bank, so it started off with Sweden and Hungary, but then the ECB got involved, they all cut rates, whereas the United States has not cut their rates. So we're getting to see this divergence, which has started, that's created more volatility in the markets. And then we had this another hot NFP came in on June the 7th. So just for 3 weeks ago now, came in again at 272 versus market expectations of 185. So this is especially off the back of all this relatively weak economic data that we've been seeing coming through the United States. All of a sudden, that paradigm was thrown on its head. And this was immediately followed by the EU parliamentary elections, which showed a swing to the right in the EU, which everybody had been expecting. It wasn't a huge swing to the right, but everybody was expecting a swing to the right. But it was quite a big swing to the right in France. And the president of France, Emmanuel Macron, freaked out when he saw that this big swing to the right, and he called a snap election, which could backfire spectacularly for the EU, because France is really a pillar of EU stability. Yeah. And that's really, really spooked the markets. This idea that France could be governed by the far right or even the far left over the next few years, because that would lead to a lot of instability in the EU project. So the euro has really been struggling ever since.
Yeah, and we saw that huge dip in the euro dollar when that happened. Yeah,
there was a gapping over the weekend.
Yes, exactly. But it looks like the Fed is poised to keep interest rates high, even though it's with this weakening US data. The CME Fed Watch shows that futures trading think there is a 60% chance of the Fed dropping interest rates. But again, I'm not sure if I believe that.
No, not sure it's been going up. It's been bouncing up and down between for months now. Yeah.
For me, we're going to have one rate cut in November, and the general trend until then will be USD strength, versus the other pairs, but especially the euro, considering the potential for political instability.
I agree. Yeah, I think that's right. I think we're probably going to see, general USD strength, and we'll see what happens with the French election. But until then, I think we're going to see, euro weakness there as well. So that's where we stand at the markets currently. That's the general trends for the year. The other thing one of the other things we want to look at is Bitcoin and crypto, because that's been a big story. Not so much now, but at the beginning of the year. So as we know, for the most part, price changes for Bitcoin generally reflect investor enthusiasm. There's not much going on there with fundamentals. It's not based on any centralized fundamentals like fiat currencies. And Satoshi Nakamoto, the anonymous guy who created Bitcoin, he designed it for use in daily transactions, but it's become much bigger than that. There's a lot of speculation. A lot of traders get involved in it because the volatility in its price. And recently, investors have turned to Bitcoin as a way to store value and hedge against inflation.
Mm.
And as a result, institutions have started creating these Bitcoin investment instruments, these ETFs.
Yeah, exactly. But before we look at what happened to Bitcoin this year, I just want to go a little bit further back to the beginning of 2023, just to give you a little bit of context. So the coin started weak in early 2023. And this was because it had fallen to $15,000 in November 2022 from its all-time high the year before of over 69,000 in November 2021. All of us remember
quite a drop.
That huge Bitcoin crash over that year, 2021, 2022. And the fall was basically due to a loss in investor confidence over the course of those 2 years following scandal and regulatory pressure. We know the FTX scandal. And this is something we've spoken and written about at length. So I'm not going to go into too much detail, and we'll place links to those episodes and articles in the show notes. Written about it at length. But
then surprising everybody, Bitcoin surged up to about 40K by the end of 2023. And it started off 2024 at about $47,000. Dollars. And, most of the scandals have been put to bed. Yet all these Bitcoin ETFs have been approved by the SEC. When they finally approved those 11 Bitcoin ETFs, the news almost had the opposite effect because the Bitcoin actually fell down to 40K again. And this is because everybody knew the SEC was going to approve them. It was kind of the reason behind the price rise as well. So the market's already priced in the SEC approval of these ETFs, but still, I mean, it was good. It was a good end to the year for Bitcoin.
Considering where it started, it was an amazing end to the year for Bitcoin investors. But then February was a different story, as we saw. So the coin surged and it smashed through the psychologically important $50,000 barrier, and it held steady at around the 53,000 mark, and then pushed past its all-time high of 2021 to form a new high of $73,000 in March 2024. But this was just before the halving event that we've been hearing about for the last probably year, which happens every 4 years and reduces the mining reward by 50%. So it basically artificially decreases the supply. And according to data shared by CoinShares, the newly approved Bitcoin ETFs pulled in roughly about $3 billion in net flows since their launch. And this obviously increased interest from institutional investors, and it also has spurred on retail investors. And they're already optimistic that lower interest rates in 2024 will increase interest in higher risk assets, like those, of course. And since then, we've seen crypto ranging between, Bitcoin ranging between 60 and 65,000. Analysts are actually cautiously expecting another upturn. I've seen figures up to 300,000. I'm not sure. I
think that's unlikely,
or how it'll get there. But there's definitely a renewed interest in Bitcoin.
Yeah, exactly. There is. Let's see where it goes. It's always hard to tell with Bitcoin, though. You never know, and crypto in general. You don't know. I think at any point, any analyst can be right with Bitcoin, if you know what I mean. Yeah. It's like a stopped watch tells the right time twice a day, right?
Exactly. You can just suck it out of your finger and you could be right probably at some stage.
Yeah, exactly. And the other big market move of this year has been gold. It's been a really interesting one. Again, something we've written and talked about a fair amount. It's already seen two record highs in 2024 already. The price is currently off the all-time high. It's set at $2,450, which was set last month. But it's still up over $300 since February and up 26% since October last year.
That's crazy.
So again, just looking a bit back to last year, there was a strong US dollar for most of last year due to interest rates. And it suppressed gold price. There's traditionally been negative correlation between the dollar, the price of the dollar and the price of gold. So it suppressed the price of gold. And this is despite an increase in purchasing from reserve banks and central banks around the world, and speculation from Asian retail. So in October 2023, gold was at a low of $1,800.
Yeah, but this was then followed by a rapid ascent. And it was obviously triggered by the outbreak of hostilities in the Middle East on the 7th of October, 2023. And most of this was because Hamas took Israel by surprise, which is something that never happens, or it hasn't historically happened. And this spooked the markets, and it increased concerns of a wider Middle East conflict. So we saw the price of gold shoot up at this prospect. And then it was supercharged by speculators, especially in East Asia, and propped up by continuous purchases by central banks. So all of these different aspects have had a huge effect on the price of gold.
Yeah, it has. And then by December last year, gold was up to $2,150, as concerns about wider Middle East conflict continued. And, and this retail speculation, obviously, the gold bugs getting on the bandwagon really pushed it up. Prices ranged until about February of this year, when the weakening dollar revived the gold bulls again. And we saw these Chinese funds have been pouring money into gold as well. And this, again, you got to understand that behind all this, central banks have been continually buying gold as well. So it hit an all-time high in April of 2,300. And then it hit another all-time high in May of 2,450. So really rapid increase. And so what's going on here? So I think I wrote about this a couple of weeks ago. I think the main thing here is you got to understand that central banks worldwide were really spooked by the US weaponization of the dollar following Russia's invasion of Ukraine. Because most central banks, they keep a lot of their reserves are in US dollars. And when they saw the US dollar being used as a weapon against Russia, especially in a lot of developing countries, they got pretty scared. And the geopolitical situation has just worsened over the last 2 years. It's not, it's not great out there. No. So this gradual shift away from using the US dollar as a reserve currency and moving into gold has become a bit of a mass movement. And this is led by the central banks of developing nations, but it's also drawn in developed economies as well. You're seeing this happen as well.
Yeah, and with few other choices available, the central banks turn to the oldest safe haven asset in the world, and obviously that's gold. And the World Gold Council, an industry promotion group, recently published its annual central bank's gold reserve survey, and the results are interesting for gold and forex traders. So despite gold's very high price, most central banks fully expect gold shares of reserves to increase over the coming years.
Yeah, no, they said in the piece attached to the survey, he said, what has been remarkable is that despite record demand from the official sector in the last 2 years, coupled with climbing gold prices, many reserve managers still maintain their enthusiasm for gold. While influences like price may temporarily slow down purchases in the near term, the broader trend remains in place as managers recognize gold's role as a strategic asset in the face of ongoing uncertainty. Now, they're a gold promotion agency, obviously, so everything we can take with a grain of salt, but the statistics don't lie. And I think they're probably right on the money here.
Yeah, I would agree. And what does this mean for traders? I mean, if we look at it, we could be witnessing the end of the negative correlation between gold and the dollar for the first time. Central banks are less concerned about the price of gold, and their purchasing priorities are now set by the long-term political goal of independence from the dollar. And using this argument, gold prices look set to continue climbing.
Yeah, no, I think that's right.
Yeah. And continue, central banks buying are likely to prop up the price and keep retail investors interested, I would think.
Yep.
And on that note, we're going to take a short break, and we'll be back just now. Hey guys, I hope you're enjoying the episode. So if you're looking for more trading education, please visit our website or FX Scout's YouTube channel. We have plenty of resources available. Our videos tackle educational topics like indicators, trading strategies, fundamental analysis, and basic Forex terms. We also provide in-depth broker reviews and platform tutorials. Again, thanks for listening.
And we're back. So we've had a chat about the Forex markets. We've had a look at Bitcoin and gold. But I know we want to talk about the Rand and the South African elections and what it's been doing this year. Yeah. So, because it's been quite an interesting story. So over the past 10 years, to the end of 2022, the Rand has declined by a cumulative 50% against the dollar. And the US dollar has strengthened by a cumulative 104% over the same period against the Rand. So on average, this means the Rand has been depreciating about 6% a year, which is pretty bad form for a currency. The last 3 years have been particularly brutal. The Rand has lost nearly 30% against the dollar. And this has been a combination of COVID, load shedding. Then there was the grey listing by the Financial Action Task Force because they thought the South Africans weren't doing enough to combat money laundering.
Yes.
And then issues of Transnet as well. And this is all torn into the local currency, into the Rand.
Yeah. And, we saw that last year was a particularly rough year. The year started off with the exchange rate at just under 17 Rand to the dollar. It then had a mini rally reaching around 16.80 in mid-January. And I think people were quite surprised by that. But the improvement was short-lived. And by mid-year, the rate reached 20 Rand to the dollar. And by year end, it was closer to 18.30. So it sort of ranged between, 18 and 19, got up to 20 occasionally. And there were a few reasons for it. So as we mentioned, central banks around the world increased interest rates to bring down inflation, the Fed and the ECB. And few of those interest rate increases came anywhere near having the impact as those implemented by the Fed. I mean, the Fed, when they increase interest rates, it has an enormous impact on the Rand. Because it's the world's largest economy and the dollar is the predominant global reserve currency. So any rise in interest rates tend to have an outsized effect, and especially on the Rand. So I would say probably, including the issues you talked about just now, load shedding and everything else, that the increase of interest rates had probably the biggest effect on the weakening of the Rand in 2023.
Absolutely. Yeah, it's a combination of internal and external factors. And so between March 2022 and December 2023, the US Fed raised interest rates by 11 times. And this has taken them to a 22-year high, where we still stand. So although the South African Reserve Bank was also trying to get inflation under control by increasing rates, the effect of the Fed's increases were much more impactful. As you said, look, there's also these other issues at play. There was a docking, people may remember the docking of this boat called the Lady R that was thought to be supplying arms to Russia. And so everybody was worried that South Africa was going to be accused of sanctions busting, which then caused the Rand to decline even further from 1880 to 1930. Load shedding had its worst year last year, and that has a huge effect on business and GDP. And obviously has a knock-on effect to the Rand and investor confidence. And then, on top of that, you had the Transnet woes, which also has an effect on investor confidence. Finally, you have political instability, and worries about corruption here. And all of this, it's kind of like a perfect storm for South Africa.
Yeah.
Both these, a lot of really bad internal factors. And then on top of this external factors, in the guise of interest rates, they've got no control over. So it's really had a punishing effect.
Yeah, it really has. I mean, it's actually surprising that the Rand's below 20 Rand to the dollar. The political instability and load shedding and, the state-owned enterprise woes, Transnet, have continued, of course, into 2024. Mm-hmm. And many investors were also keeping a close eye on what Jacob Zuma was up to with the newly formed Umkhonto weSizwe party, the MK party, and whether he would cause another insurrection like he did in 2021. I'm sure everybody remembers that, July 2021 in KwaZulu-Natal. I think there were over 300 deaths and a lot of damage. But they were worried that it was going to cause an insurrection over the IEC's decision to prevent him from running as party leader, obviously because of all his,
previous.
And as a result, the rand remained weak, and it's ranged between 18 to 19 to the dollar.
Yeah, and then this is in the run-up to the elections now, and then the elections happen 29th of May. Yeah, to say, investors are spooked. They're very worried about what was going to happen in these elections. And as expected, the ANC won only 40% of the vote. It's the first time it's come in at less than 50% since they came into power. Gosh, what's it been? Over 30 years.
30 years,
yeah. The Democratic Alliance, as the main opposition, came in at 22%, and then the MK, Jacob Zuma's party, surprisingly had over 15% of the vote. So what this meant here is that the ANC would have to form a coalition, and the investors were terrified that they were going to sign up with either Jacob Zuma, the MK party, or the Economic Freedom Fighters, the EFF, who are these mad radicals. And then, so on June the 6th, the rand had weakened very close to 19th. Down to 19 to the dollar. Thankfully, the EFF and the MK, they refused to work with the ANC over various issues. So the ANC has formed a government of national unity, a GNU, with the Democratic Alliance, which I think surprised a lot of people.
Yeah.
It's a difficult thing to do, to form a government of national unity with your main opposition.
Yeah.
And then, and a few other smaller parties as well. The inauguration has gone smoothly, and investor confidence has strengthened. And the rand is back up to under 18 to the dollar for the first time this year, which is pretty good news for South Africa.
Yeah, I mean, it is. It's amazing news for South Africa. But, we're still in early times of the GNU. So it'll need to succeed for the rand to stay strong. Well, get stronger, should I say. So can the DA and ANC work together? They've already had a bit of a rocky start. Will Ramaphosa survive if the GNU collapses? I'm not sure. Nobody's ever served 2 terms, since Madiba, so I'm not sure. And there's high potential for political instability and investor flight. And we'll be keeping, obviously, a very close eye on its developments and see how it goes.
Yeah, no, it's an interesting one to watch. Yeah, and then finally for today, the last thing we're going to talk about is something I talked about, as you mentioned in my solo show a few weeks ago, is prop trading. I just want to run through it again, just because it's very topical, I think. So prop trading is a form of Forex trading that's grown hugely over the last 5 or 10 years, very popular. And this is because traders can trade without risking their own money. So... And you can trade with a larger account as well if you're a good trader. So the way prop trading works is you go to a company and they say, we would like you to trade for us, and here's some money. And you go ahead and trade. And you'll have to pass a test first to prove that you're a good Forex trader. And once you pass that test, then you can end up with very large accounts. Like very good traders can end up with, $500,000, $1 million, $2 million trading accounts. But the interesting about the prop trading model is that it's a demo account model. So when you trade, your prop trader said, sure, here's 2 million, go trade with it. And then any profits that you make, we will share. Usually traders can get, they can get fairly large amounts. They get like 50, 60, 70%. And then the prop trading firm will take 20 or 30% on top. But the trick is you're actually trading on a demo account. These funds are virtual. And what the prop trading firm will do is that they use your demo account trading as signals. And any of your trades that fit within their risk model, they'll take those and they'll actually place them in the market. And because of this model, because you're not actually trading with real money, and the prop firm is only investing their own money, there's no need for financial regulation here, because there's no actual money ever changing hands between you as a customer and the business as a prop firm. So anyone can start a prop firm with enough investment and a solid risk management model. But this model means that there's no regulatory oversight. And it's also, because it's trading on demo accounts and the prop trading firm only takes some of your signals, this can cause serious issues with payments, and also creates insecurity for traders, because you don't know, because your firm is not regulated, do you know if the prop firm you're trading with, if it's legitimate? So it's a very popular form of trading, but there's been a lot of question marks, and it's run into trouble recently.
Yeah, and as you said, issues have been with the lack of regulatory oversight. So we saw what one of the ones we talked about last year was my Forex funds, and they were accused of manipulating the chart. So they allowed traders to pay to skip the trading test, and then they basically forced traders into losses. So they manipulated the charts. So the traders thought that they were losing, and obviously then they didn't have to pay their traders out, but because of the demo model, they were still making the wins. And someone obviously cottoned onto it, and then there was a CFTC investigation that followed, and this then spooked the platform providers, and it also spooked the brokers that they work with. And as a result, MetaQuotes pulled support from brokers who supported prop trading. And then there's also a rumor of ESMA, the European regulator, getting involved.
Yeah, exactly. So sources inside the European Securities and Markets Authority, to give them their full name, said that they've recently run an initial check on prop trading firms, and they're discussing regulation in the industry. Finance magnates actually had a quote from an unnamed insider source, so make of this what you will, said some regulators don't believe in prop trading model, some want to ban the model, and some believe the model is just going to die off naturally. But we should expect some clarity one way or the other towards the end of this year. So regulators are obviously looking at this very closely. But the nature of the prop trading model has also created confusion about who should regulate the industry, because the rules around prop firm operations, as I just explained, maybe they're better suited to gambling and gaming industry regulation rather than financial. But yeah, in the meantime, we've seen a lot of chaos in the prop trading world. A lot of the newer prop trading firms, the smaller ones, are being forced overseas, or they've had their MetaQuotes. Famously, they've had their licenses revoked, or they've been cut off from brokers. Payouts, which are often delayed at prop trading firms, have been even more delayed, or some firms have just gone under; they've disappeared entirely.
Yeah. But interestingly, if it does become a gambling or gaming, if that regulation comes into play, it means that the brokers will not, definitely will not be allowed to offer prop trading. Because we've seen a lot of CFD brokers moving into that prop trading space. Axie, Oanda, Handtech, and IC Markets, and I think quite a few of them are still looking at getting involved. But Greg Rubin, the head of Axie Select, says currently prop trading is like the Wild West with very few industry regulations. Most players in the space use demo accounts and charge a registration fee to participate. They ultimately structure the offering to be virtual and non-financial, and therefore not subject to financial regulation, just as you said earlier. So it's exactly how they do it, which means that most of the firms would likely not even have to complete the most basic client checks like anti-money laundering or know your client, the KYC documents on the clients. So, if this is the case, regulators are definitely not going to let this go, because this, although it's a very clever model, it's something they're definitely going to keep their eye on.
Yeah, when you start trying to evade anti-money laundering regulations, regulators don't like that. No. They really don't like that.
Countries don't like that.
Countries don't like that. Nobody likes that. So, yeah, I think one way or the other, we're going to see regulation come down the line, which is good. Like at the end of the day, like for traders, whether you're trading in a prop firm or you're trading, with a broker, you want regulation. Regulation is good for you.
Absolutely.
Yeah, it gives you security. The last thing you want is to be trading with a company that takes your money and runs.
But even if you're not giving your money, it's put out, we were talking about that earlier as well, putting all your time and effort into trading and coming up with a strategy, and, you getting these virtual funds, in inverted commas, from the prop trading firm, you want to be paid out for all that effort and time.
Absolutely. Yeah. No, exactly.
Yeah.
No, so I think most traders will welcome the regulation.
Cool.
So yeah, there you have it. That's our market wrap for 2024 so far. I think the rest of 2024 is going to be very exciting. We've got obviously the French snap elections while we're away. We've got the UK elections as well, happening in a couple of weeks, and then we've got the big kahuna. We've got the US elections in November. which could really throw a cat amongst pigeons.
Yeah.
To steal a phrase. So yeah, I think markets are going to be very interesting. We'll see about how the Federal Reserve, whether they do cut rates in September, and what happens to gold, what happens to crypto, what happens to prop trading. I think it's going to be exciting rest of the year, Alison.
Yeah, make up for the beginning.
Yeah. Well, no, going over it just now, it sounds actually there has quite a lot been happening. Not too much in Forex, but in a lot of other stuff.
Yeah,
there's been a lot of other stuff going on.
That's true.
Cool. Well, leave it there. Have a great summer, Alice. Oh, great winter, I should say.
Yeah. Thanks, Chris, and enjoy your summer.
Yeah, I will. Thanks so much, Alison. Speak to you in August.
Cool. Cheers, Chris.
Cheers then. Bye.